Hello folks, Hector here, recording a live trade I've just taken on the sterling pound against the Swiss franc. It's a London Open breakout type of trade. In fact, we are seeing quite a huge momentum actually. That was my entry about 1 minute ago, 177.19. I'm going to try to explain the reasons as of why I've taken this trade, because it's a rather interesting trade. It's mixing two types of different setups. First of all, a London Open breakout type of trade, and then I'm also, if I show you the 4 hours time frame, I'm trading the initial breakout, okay, the initial breakout of the previous resistance level. All right, so okay, we are now looking again on the sterling pound against the Swiss franc, 4 hours time frame, clear decision taking level, clear turning point. Price was hanging out right below that level for actually quite a while. In fact, if I go back into the 1 hour time frame, well, we can see how yesterday price topped out at that level. Then today, throughout the Tokyo session, it topped out at that level again. And once again, price was simply, trying to find the momentum enough for, for the final push to the upside, obviously. Obviously, well, as usual, the Tokyo session just doesn't have the punch, just doesn't have the momentum enough to break through important levels of support and resistance. So, basically what I was doing, and apparently some other traders as well, what we were all doing is waiting for the London Open, for the London market open to come in place in order to find that momentum for the breakout. Okay. And the London market opened about an hour and a half ago, okay, right there, and from there we have indeed seen the market volume, the punch, in order to break through that level. It was exactly the 177.00 level, right, round number, heavy support and resistance from a psychological point of view, as well as from a technical point of view, as we can see. So certainly a level to keep an eye on today. Now zooming into the 15 minutes time frame, well, we can clearly identify that overnight Tokyo range. Okay, beautiful Tokyo range, price flapping sideways for all the Tokyo market long. With 2 focal points to the downside, few focal points to the upside. So certainly the level to keep an eye on was today again the 177.00 level. And as the London market, as I was saying, somewhere in there, we saw the momentum a breakout to the upside, then a little bit of a pullback, which is signified by that red bar there in the 15 minutes time frame. Actually, you may see that better if I zoom in a little bit more. All right, right there, you see that? Well, that's the pullback that I was waiting in order to base my entry. Sometimes you don't get it, okay? Sometimes the momentum is just so much, the trading volume is so high that price simply rockets through the Tokyo high, the Tokyo high, and never looks back. It never gives us the breakout pullback continuation pattern. This time around it did. This time around we did get the 1 bar pullback, so I could base my entry. Ooh, beautiful move. 1 second, guys. I'm about to get out of the trade. Just a second. All right. Well, I'm gonna continue explaining the trade. It's just three pips away. Anyway, as I was saying, we got the breakout pullback continuation, and I based my entry. I placed my entry. As I was saying, as I was seeing the pullback in real time, I placed my buy stop order at 177.19, which is basically above 1 pip above the breakout thrust. Okay, the London market open breakout thrust. Stop loss as usual, placed a few pips, a couple of pips below the pullback aspect, right there, 177.97. My first target, as you can see, as usual, I like to base my first target around the next round number, which in this case is 177.50, 5 pips before hitting that level at 177.45. As usual, what I'm going to do is I'm going to exit half of the trade around that level. I'm not going to move my stop loss to break even. What I'm simply going to do is I'm going to cash out some profits, 50% of the trade. So if price turns around and hits my stop loss, it will be more or less of a scratch trade. This being my entry, this being my stop loss, and this being my first target. As you can see, the risk-reward ratio is rather similar. It's a little bit positive. The distance between the entry and the first target is a little bit larger than the distance between the entry and the stop loss, but not by that much. Okay, so if I do cash out some profits there and price turns around and hits my stop loss, it will be a scratch trade. That's that's the way I like to base my intraday money management or actually risk management policies. So I like to cash out some profits as soon as possible, but I especially on London Open breakout type of trades, I don't quite like to trade my stop loss to break even, because usually the stop loss is just too close from the first target, and any random wiggle may easily knock my my stop loss at any time, right? So what I'm going to do, again, 50% out of the trade at the first target, and the stop loss will remain as it is. Now, going back into the 1 hour time frame, as far as the final target goes, then I stretch my chances and I go for the full projection, for the full ATR projection. As we can see, the full projection to the upside is the 178.68, which comes somewhere in there, right? This being the low of the day, and that was the full projection. I like to exit as usual at the 80% of the full distance of the full projection. Also, we have a round number right there at 178. So I've placed my final target at 177.95. It's a typical procedure of mine. I look at where the ADR, the average true range, average daily range, actually is, the projection I mean. Then I look at the round numbers and I try to locate my final target just before hitting those levels of intraday resistance. Okay. Well, that's basically all for this trade. My first target is about to be hit. It didn't quite touch it yet. I'm still in the trade. A few pips left, 5 pips left. Hopefully, it will keep on pushing. Ooh, just a second. I gotta be ready here. 1 second. Come on. I'm still not filled out. Okay, there it is. Sorry about that. I had to look at the at my side laptop where I have my broker, where I connect through my broker. Anyway, so 50% of the trade out. Stop loss, again, I must repeat, still sitting at 176.97. Wow, look at that beautiful push to the upside. That's usually the beauty of trading at the beginning of the London Wow, look at that. Oh my God. That's the beauty, again, of trading the London market open. It's just the most volatile, the most momentum-filled moment in the market. Wow, look at that beautiful move. Well, anyway, 30 pips away from my second target. But well, since I don't want to overstretch this video too long, obviously I'm not going to hold you guys here looking at my trade in real time. Anyway, that's pretty much it for this trade. Prototypical London Open breakout type of trade, defining the the Tokyo session range, waiting for the London market to punch in its usual trading volume, the trading volatility. The London market opened there. We did see the momentum, which is always a good sign. You want to see momentum at the London Open. Then we got a little bit of a breakout pullback continuation pattern. I triggered my entry, and well, off it goes in my direction. My final target already hit, and again, I was just mixing that Tokyo range with long-term, in this case the 4 hours time frame, with long-term levels of support and resistance. Right, the Tokyo range came right below that level. It was just a matter of getting the momentum enough to break through. Another valid possibility actually would have been a reversal formation right here. How is that? Well, because it would have meant that price was failing. As soon as the London market opened, if we didn't see the momentum to break above, and in the other hand we saw the momentum to the downside, it means that the London market, the London-based traders were basically sending their volume